Forex trading can seem overwhelming at first, but breaking it down into manageable steps makes it much more approachable. Let's dive into the 7 essential steps for success in Forex trading. First, understanding the basics is crucial. This means familiarizing yourself with key concepts like currency pairs, pips, and leverage. Currency pairs are simply the value of one currency against another. For example, in the EUR-USD pair, you are looking at how many US dollars 1 euro can buy. Grasping these fundamentals sets a solid foundation for your trading journey. Next, building knowledge is vital. Read books, take online courses, and follow reputable financial news sources. The Forex market is constantly evolving, and staying informed about economic indicators, geopolitical events, and market trends will give you an edge. Knowledge is power, and in trading, it can be the difference between profit and loss. Choosing a broker is the third step. Not all brokers are created equal. Look for one that is regulated, offers a user-friendly platform, and has competitive spreads. Take your time to compare different brokers. Read reviews and even test their demo accounts. A good broker can make your trading experience smoother and more efficient. Now, let's talk about developing a strategy. This is where you'll define your trading style, whether it's day trading, swing trading, or scalping. Your strategy should include entry and exit points, as well as criteria for trade selection. Backtest your strategy using historical data to see how it would have performed. This will help you refine your approach and build confidence. Mastering risk management is the 5th step. Never risk more than you can afford to lose on a single trade. A common rule is to risk only 1% of your trading capital on each trade. Use stop-loss orders to limit potential losses and protect your account. Remember, preserving your capital is just as important as making profits. Controlling psychology is the 6th step. Trading can be an emotional roller coaster. Fear and greed can cloud your judgment, leading to impulsive decisions. Develop a disciplined mindset by sticking to your trading plan and avoiding emotional trading. Journaling your trades can help you reflect on your decisions and improve over time. Finally, start small. As a beginner, it's wise to trade with a small amount of capital. This allows you to gain experience without risking significant losses. As you become more comfortable and confident in your abilities, you can gradually increase your position sizes. Remember, trading is a marathon, not a sprint. In summary, success in Forex trading comes down to understanding the basics, building knowledge, choosing the right broker, developing a solid strategy, mastering risk management, controlling your psychology, and starting small. Each step is essential, and together they create a roadmap to help you navigate the Forex market effectively. Embrace the journey, stay disciplined, and keep learning.